Hey everyone, welcome back to my YouTube channel. I am Xavier Smith, and today I'm going to teach you why I'm expected to be a millionaire by 24 years old and how you can too. And this is tax-free millions based on covered calls. So let's get into the calculations. All right, so first, I guess we will just check out the calculations. So here we can see this is 1% a week because 1.01 would mean gaining 1%, and there are 52 weeks in a year. So if I was to gain 1% a week using covered calls, which I'll show you how to do later, which you'll see that it's pretty feasible, that would be 67.8% gain a year. I know, it seems crazy that you beat the market by that much, but it really looks like you could using covered calls, and so far they work super well. And then this would be if I got 0.5% a week, 1.005, 1% a week to the 52nd power, because clearly every week I'm reinvesting that money and getting another 0.5% on it. And that would be a 29.6% gain in a year, which is also pretty crazy. That's like Warren Buffett's average. And then if you get like 0.7% a week, which is what I'm going to go with, because that's a lot of times you can get 1% a week. You can get 1% a week on the S&P 500, right? Just selling a covered call on it. And on most stocks, you can also just get 1% a week. So I'm going to go that if a stock does go down by a little bit, probably all my other covered calls will make up for it, and I'll probably get 0.7% a week. So that would still be a 43.7% gain a year, which is crazy. And I'll actually have to see if it works out to this in a year. But so far, it's it's been working out just to plan, and 1% a week has been going strong. But zero point 0.7, we'll go with it because some weeks I can get 3%. And if I get 3% a week and then I lose 1% the other week, I'm kind of balancing it out pretty easily. So also the compound interest calculator I'm using doesn't let me go above 50%. So we can see that my Roth IRA has $7,750, and it is December 23rd, meaning that on January 1st, I can add another 7 grand to my Roth IRA, which is then tax-free earnings. So if we go off these numbers, it would be 14,750. So my initial deposit would be 14,750. I'd be getting 43.7% a year based on like 0.7% a week. And then we would contribute another 7 grand a year because that's just the Roth IRA contribution limits. And of course, I'm going to max out my Roth IRA. So if we look after 9 years, right? I'm 15 now. So in 9 years at 24, I would have $1.3 million. And it's kind of crazy. Clearly some years I'd lose money. At the S&P 500 does give 1% a week. I mean, clearly if it tanks, right, I lose money. So I'm not guaranteeing that at 24 years old, I'm going to have 1.3. If I say 0.5% a week, 29.6% return, then in 9 years, I'd have 470 grand, which is still a lot of money, right? And then we'd have to say like 13 years. After 13 years, 1.5 million, 12 years. So in 12 years, I'd have 1.16. So it would take another 3 years at 26. But you can see just the market average instead of selling covered calls, because covered calls are the thing here that are, you just sell them every week and they're giving you 0.5% or 1% or more. So you're trying to find a stable stock. If I was going to 7% in 12 years, I'd only have 161 grand. But in like 30 years, oh, in 35 years, yeah, in 35 years, I'd finally be a millionaire, which is a lot longer if you weren't selling covered calls. So now I'm going to just show you how to sell covered calls. So clearly do this in a Roth IRA, right? You're going to be at the same starting point as I am. I only have 7 grand in here. That's 1 year. I just added this 7 grand, and I can only add 7 grand more. So if you just do 7 grand a year, then you're going to just be in 9 years. If you follow something like what I'm going to show you, theoretically, you would be a millionaire. So this is why. We can look at some things like I'm in Nike right now, but that's not really what matters. If we look at the S&P 500, just because people think that's the safest thing, right? Even though it could clearly crash, right? It's less volatile than most other things. So if we look at the trade options, right? We can sell a call It's at 591.89 right now. If we sell a 592 call, oh, that's expiring today. If we want this to expire on like Friday, right? If we want this to expire on Friday, then they'd be paying 384. 3.64 divided by 592. And that's approximately 0.6%. And if it does actually activate, then you'd be getting another 50 cents. So it's 4.14, which would be like 0.7%. So clearly, you're still getting 0.7% off the S&P 500. And give it, there is Christmas Eve and there is Christmas. Christmas Eve, I think, is a half day, and then Christmas is a full day off the market. So there are only really 3 days on the market this week, and you're still getting 0.7%. And that's what people think is like super safe. People love the S&P 500, right? They're going after it. So if you're getting 0.7% a week off of this, clearly it crashes, and sometimes you're going to be losing money. But theoretically, if it didn't crash and you could get 0.7% a week, right? Like in a bull market where it keeps going up, right? It's hitting new highs because we're at like the peak of a market right now. Let's look. We're at like the peak of a market. So it might hit a little correction somewhat soon. But after a correction, when it starts coming back up again, if you're just getting 0.7% a week, no matter if the stock keeps going up, you're getting 0.7% a week, which again, that would mean in 9 years using your Roth IRA, like just starting it now. Well, for you guys, it would be 10 years. So in 10 years, just starting your Roth IRA, or 11 years, you would have $1 million in there. And that is tax free. Finally, if you do want to withdraw money from a Roth IRA, because I am showing a Roth IRA, you could do this on a trading account, but you would have to pay capital gains tax, and it's the highest tax because you are trading in and out every week. Technically, you can sell these calls out for like a month and maybe get a few percent off of it, but I prefer just the 1 week. But yeah, you can always sell a few weeks out. Like, let me just show you. If you sell like 32 days out here, right, instead of 57 cents, they're paying you 227. So they're paying you 4.5 times as much, and you're getting like 4.5% instead of like 1.7. So you can always go with that. And if you think that's better for you, you just don't want to check the market, go ahead. So if you want to take money out of a Roth IRA, though, you have to be 59 and a half. Like it's a retirement account, or you can just pay a 10% penalty on the earnings, which I would say is still a lot less than the taxes. I don't know why they say on top of any taxes owed. I feel like you've already paid the taxes. But then down here, it only says 10% penalty for the earnings portion. So maybe it is only a 10% penalty because like you're already paying taxes when you're putting money in. So if you're only paying a 10% tax, I don't know, but you have to pay a 10 penalty if you take the money out. But I think it's still less than if you were just holding it in a actual like non-retirement account. And then there's also certain situations like a first time house purchase. So that means at 24 years old, if this works out to plan, I could buy $1 million house with my Roth IRA. Like I wouldn't because I want the money to keep compounding, but I could take out money from my Roth IRA tax free and pay for like the down payment of a house. And that is nice. Also, when I retire, if I just like left that money in there, I just have like a couple million to retire on, and you could just retire early. So that's the good thing about a Roth IRA. If you don't do it in a Roth IRA, like a normal, if you do it in a normal trading account, you can put as much money as you want in, but you're going to pay more taxes. So over time, it might even itself out, but you might get $1 million faster in a normal trading account, but you're going to have to pay way more taxes. So I hope this video was helpful. Thank you guys so much for watching, and let me know if you have any ideas about this, and let me know if you need help setting up a Roth IRA, and I hope to see you guys next time.